You are listening to chartingwealth.com for Tuesday, the 14th of February, 2017. We see that the S&P 500 is up for the day. The Q's up for the day, both about 0.5%. Gold and bonds down for the day. Why don't we go ahead and jump right into the S&P 500, up 0.53%. Boy, from the time the S&P 500 finished its flat drive in the last 4 two-day candles, it has been moving. Of course, we saw at the end of the past week, we had that two-day chart finally rotate over, going up. And of course, it has shot up throughout the course of the day on Monday. So we'll continue to monitor everything that's going on in the S&P 500 right now under our traditional method of jumping in. Of course, the crossover back on the 2-hour chart happened all the way back on the 9th, well before the past week ended on the 10th, and the new crossover was confirmed. So we don't have a trade unless you had tried to jump in early in the morning after idiot hour on Monday, which is not a traditional method we have of jumping in. We've just established that for trying to find a good entry point after a weekly vertical crossover. Not something we necessarily recommend with a 2-hour and 2-day chart. So we'll continue to watch. Maybe we've got some topping on the market, but we don't know yet. We're waiting for a rollback before there's any entry point. But what do we have that continues to just fly up, up, and away since its vertical crossover at the beginning of the year? And of course, we had our 2-hour pullback and then crossover sometime around, well, we'll have to actually go to the 2-hour chart. This is on the Q's. We, of course, had that occur back at 4 p.m. on the 1st of February. So we have had both our vertical crossover when that occurred all the way back on the 9th of January. Again, jumping in point somewhere around $22 all the way up to $28.15 is where it ended the day on Monday. In fact, what was the high? The high was $28.91 from $22.30. That's just incredible to see the way the market has rocketed up. If you've not already made enough in your virtual trade, that is an incredible climb, an incredible climb. And if we do, though, hone in a little bit on the let's go to the 2-day chart and take a bit of a look and analyze that for where we are. It looks like it's continuing to build. In fact, the PPO actually spiked up a little higher, and the derivative oscillators gaining energy. Just be careful and don't get too greedy on taking profits when you see things move up so substantially. And again, the 2-hour chart is still maintaining. It does look like it started slipping sideways toward the end of the day, so just be careful. Again, you don't have to be greedy. You don't have to have every single penny in the pile, but there's nothing yet stopping you from continuing to let some or all of that ride. It's just getting awfully long in the tooth, which, of course, if you've gone from 22.30 to 28.91, that is one heck of a climb over just the short period of just a little over a month. Lots. Well, and of course, if you had jumped in somewhere around that jumping in point on the 2-hour chart at about 124, 125, again, up $3 in just a few short days. So about less than 2 weeks. So we will continue to watch the progress. We love these vertical crossovers when they happen on our weekly chart. That's where we are as far as the Qs go. So both the S&P 500 and the NASDAQ 100, as represented by the Qs, are still continuing to move up. Things a little different with our bonds. We see that TLT was down for the day, 0.13%. First day of the new 2-day candle. We've broken our 2-day trend line. That has been broken. We're still up, and we see the derivative oscillator continuing to gain energy, so all hope is not lost. Of course, we had a wonderful getting in point there on the 2-day chart and the weekly chart back. I'm sorry, the 2-hour chart and the weekly chart. We'll zoom into that a little bit and cover that a little better. We saw on the 2-hour chart, oops, our charts are moving a little slow on us today. Okay, all right. Patience, my friends. Sometimes we're getting a little bit of skipping here. Okay, we've got the jumping in point on the 2-hour chart was around 10:30, about the same time actually as the jumping in point for the weekly crossover, somewhere around 119. And of course, we have seen the treasuries get as high as 122.24. They're now around 120. So again, just continue to watch this. A lot of you already took your profit right as everything topped off. It has started to drop over, and once we saw that crossover going down on the 2-hour chart, that happened late in the day on Thursday. Markets did drop big time Friday and then dropped again and picked up in the afternoon on Friday, dropped again on Monday, picked up a little bit in the afternoon. Derivative oscillator is losing some of its downward momentum, but we do continue to see the PPO heading down. So again, be careful. You've not lost anything yet from your starting point. Again, profits that you don't realize aren't there. Don't get hung up. I've got to get all the way back up to what it was before. Things are still ticking along as we move out in our charts. If we look at the weekly, we still see the PPO spiking up along with the derivative oscillator. So again, these tend to be long-term trades. We don't want to lose everything and go into the negative, but sometimes there is a little bit of risk to take if you want the reward of things moving back up. I had people asking, well, what can I do about this 2-hour chart when it crosses over going down? You can always hop out at that point, sell off your position and your profit, wait for it to drop down, and when it crosses back over going up, that's what? Your typical entry point, right? You can jump back in at that time. And in fact, if you had gotten in on that 2-hour chart, that's just when you might consider that the most. The weekly traders on the weekly crossover, different mindset. You might stay in through that. But again, we don't yet have any kind of crossover on the 2-day chart. We see that the 2-day chart, again, the derivative oscillator gained energy. It's running parallel. Can continue to monitor that throughout the week. Remember, we're practicing, we're learning how these charts work. All right, now let's go to gold, down 0.68% for the day. Gold on the 2-day chart is losing energy on the derivative oscillator, and we do see a flattening, of course, of the PPO. If we look on the weekly chart, we see that the derivative oscillator is continuing to gain energy and the PPO is continuing to head up. Now, those of you who jumped in on that short chart, on the 2-hour chart, you can see that that 2-hour chart did cross over going down back at noon on Thursday the 9th. And of course, if you're doing the shorter chart trade, you may actually make up your mind to get out when you see those kinds of crossovers occur. Why? Because you can get back in when it crosses back over going up. Long-term traders can do the same, but again, it's going to give you more and more of a whipsaw. We did break through the 2-day trend line, still above the weekly trend line, and of course, still gained a nice percentage increase, even with the most recent drop. Folks, that's where we are as we get to the end of the day on Monday and go into Tuesday, the 14th of February. It's always fun to follow these charts, to get excited to watch these vertical crossovers occur, these jumping in points, figuring out when it's best to take profits and get out. That's what makes this so much more fascinating than many, many other things you will do in life. It's wonderful to watch that scoreboard. It is just loads of fun. If you have questions, problems, concerns, of course, go to the Charting Wealth website. You can always email us, cw@chartingwealth.com. We do all we can to try to respond to those requests. You appreciate what we do? Well, let us hear from you on social media. Say something nice about us on Facebook, Twitter, Instagram, YouTube. Subscribe to our YouTube channel, Charting Wealth. Please also, if you really appreciate what we do, go to iTunes, subscribe to our podcast, give us a 5-star rating, say something nice about us. A lot of you rate us. We really also appreciate kind words. They help a lot and go a long way letting us know you appreciate us. As you know, we don't charge for anything here at the Charting Wealth channel. This is our gift to you. So use it wisely. We are not a stock calling service. We are an information education company, and we are here to try to share knowledge of these charts. And you have seen how prescient and accurate that information has been, and we've really been keeping up with it since the beginning of the year. You saw the 5.15% earning increases that we had on our charts over January, and you've seen the wonderful success we have had so far in the month of February. We'll continue to keep you posted on our buying points and our topping points. We appreciate you. Hope you appreciate us. Again, let us hear from you. God bless from chartingwealth.com.